Alright, is this working? Yes. Okay, it's working. Nice. Alright, so this week has been a very, very hard week for me. It's been a type of week where the draw on liquidity, the target are very obvious. Let's see if I can get this out the way real quick. So today has been a very, very hard week, right? For me, at least, it has been a very hard week. Like, this week's draw on liquidity and targets have been so clear that price is going to go and take this high or take this low, right? But the executions I had this week were tough. I either got chopped out or wigged out my entries. And price this week really did do me something. Like it really just punched me in the face today or this week. And I've been in a losing streak. I've been in a very I've been in a losing streak, and today Friday, I took longs today at Friday, and they went in my direction that I wanted it to, but before that entry, I took a long and then I got stopped out. It was a very big wick. Let me see if I can pull out my chart real quick. So this here, I'm gonna see if I can pull out my executions. So as you can see right here, I went long with 5 M&Q contracts, and I then got stopped out when 10 a.m. opened, printed the wick, but it was a very aggressive wick. Like, we opened and then we just wicked all the way down, taking my entry or taking my stop. And I was down like $400 to $500 on 3 of my accounts, even though they weren't supposed to be down that much. They were only supposed to be down around 200. But my stop loss didn't really initiate that to exit the positions. It didn't really exit the positions because it was so fast and aggressive that I was down more than I should have been down. And I then realized that this wick here was to manipulate, stop people out who were long like me, and then continue going higher. So with this logic, I anticipated a 10 a.m. open low, a open low, high close, which is why I entered another long position with my validation level being this manipulation to target this buy side liquidity at 830. So this 830 high was my draw between these two deviations, -2 and -2.5. And I also used the confirmations of body closures above this 5-minute SIBI, which is now an inverse, and the same thing for this 15-minute SIBI, that inverse as well, to then ride out the expansion that I anticipated. But this entry at 9:56 was very poorly, because at this time I didn't check the clock, right? I was looking at price, but I didn't check the clock. So this wick, for me to get stopped out like that, was actually, it actually made sense, because due to me not checking the clock before my entry, 10 a.m. printed the wick and took me out. So it wasn't price that took me out, it was time, right? Because what I could have done better is wait for 10. So not enter at 9:56, just wait 5 more minutes, wait for the manipulation to occur, and then go long, just like this trade right here. And yeah, it was a very clean delivery, just very poorly execution on my first. So I was down like 400 on those 3 accounts. And this entry here and this trade made up the losses with a 127 profit on these 3 accounts. And I'm sizing down on these accounts from 1% to like 0.5%, because once you're above the buffer of these funded accounts, I usually start risking around 0.5%, because 1, I feel comfortable with this amount, and 2, you have a lower probability of blowing the accounts or losing a lot on them, just because you're risking 0.5%. You're cutting the risk in half once you're above the buffer zone, or above the buffer zone. But this was the profit for today, and I think today was the only day where I actually found price clean. Like, I knew what was gonna happen, right? I mean, I can do a little breakdown actually right now, but let me see. Okay, so let me start from the monthly. So monthly time frame, we still have this high here untagged, so that could still be our draw on liquidity. Weekly, we are still inside this range around this weekly fair value and this other one here down here. Daily, we have this candle here with 2 liquidity levels, previous day high and previous day low. So what is the more logical sense? Like, what is the more higher probability for price to take? If we are following the higher time frame institutional order flow, then it would make more sense for us to target the highs. So previous day high, monthly high, as long as we see some kind of S&T at the lows. So let's look at the 4-hour. 4-hour, I was only bearish if we close below this level to validate this as an order block. But notice how we didn't close below that level, but instead we closed slightly above it, meaning I wasn't bearish anymore. I was looking for this fair value gap to hold. And if we go to our hourly, you can see how we're just chopping around this range. And when price was coming down here, I was looking for an SMT at the lows because I've seen this scenario like 1,000 times where after news, actually let me see, hold up. Where's the SMT? Okay, right here. So when I woke up, I saw we had SMTs at the lows right down here. And you can see how ES didn't take that low where NASDAQ did. So I saw those SMTs at the lows and I was like, okay, if price has these SMTs and we're failing to take this previous day low level, then we're likely going to reverse and look for the highs. But for this to happen, I needed confirmation. So if we go to our 15, let me get rid of all this noise. What I wanted was to have proper confirmation. So I wanted more of like closures, body closures above certain PD arrays, certain levels, and if we go to our 15, you can see how this 15-minute SIBI, once we were trading inside, I was anticipating this SIBI to become an inverse with a candle closure above, validating this as a support level for price to continue going higher. And I anticipated this to happen because I saw us consolidating with news high being untagged and us manipulating down, SMT failure to take this low, and the body closure above this SIBI. So this made sense to me because I seen it like 1,000 times play out. So I was anticipating this, but I wasn't getting in right away at these wicks. I was trying to wait for more confirmation. So I was looking at this 5-minute SIBI as well. And once I saw us inside this PD array with body closes above like this, I was like, oh yeah, we're definitely going to go for the highs. So I was on the 1 minute looking for an entry, and I got in at this inverse right here, this little inverse. So I got in at that little inverse along around this area, this candle, and you can see how price then traded down around the 950 to 1010 with 10 a.m. creating the wick of the 4-hour candle around this macro. So time took me out and I re-entered longs again after anticipating this to be the manipulation of this 4-hour candle and writing out the 4-hour expansion. So that was the reasoning why I re-entered my trade, because the first entry was just really bad timing. It was really bad timing. And I was like, okay, so if we're gonna now expand, the time should be now, considering we had those bodies of candles above this 10 a.m. open. So yeah, I was looking for that 38 high inside these deviations, and yeah, nice clean delivery. But after we took this high, I got out at this candle right here once price started dipping down, because we did have SMTs at the highs because ES already took previous day high and everything else, but NQ didn't. So I was like, okay, yeah, this probably has probability of just reversing, retracing. So I just want to get out, lock in my profits, and not give anything back. But I could have held to New York midnight open or potentially previous day high, but I don't really want to do that considering we have S&Ts. So if we didn't have those S&Ts, I would have held, but we did, so I just got out. But yeah, apart from that trade breakdown, I'm probably going to call today a break even though I'm up in profit. I'm going to call it a break even because first execution was like not a very good one, and I lost more than I should have. So I'm going to call it a break even today. But yeah, this week has been kicking my ass. I will show you my journal on this week and why this week has been very hard for me. This is for me to watch, to reflect a year from now, and to show future to show me from a year now that this is what I was going through. But if I can go to my journal real quick, this is pretty slow, I'm not gonna lie. I need to get a new PC. But I'm gonna go to my journal real quick. Exit page. Okay, I'm gonna have to get out of here then. And then re-download it again. Alright, there we go. Now it's loading. Yeah, I just don't like how slow this is, but yeah, I've been journaling my trades for like 12 months now. Not 12 months. I've been journaling it for 10 months. So since the start of this year, I've been journaling January, February, March, April, May, June, July, August, September, and now we're journaling October. But I'm gonna show you my trades. Okay, so this is when the week started, so I'm gonna do it like this. Okay, so Monday I took a loss, Tuesday I took a loss, Wednesday I took a loss, Thursday I took a loss, and today, which is Friday, break even. So I'm gonna show you. Okay, so for Monday I broke my rules. For Tuesday I did not break my rules. Wednesday I broke my rules. Thursday I did not break my rules, and today I did not break my rules either. But I'm gonna show you the trade for today on Monday. If I can open this real quick. So you can see I'm down on Monday $417. And if I can show you the images. So I'm guessing we're trading the internal range of this 4-hour fair value gap. Okay, this is how overnight price action looks. Okay. SMTs at the highs. 5-minute change state delivery. Okay, I'm guessing we're targeting this low here. And oh yeah, that doesn't look good. So yeah, I get wicked out here. I get wicked out again. 2 trades. 1 trade a day only. Yeah. That was my loss on Monday. Expected London lows and 2 a.m. 4-hour low to get taken before Asia relative equal highs. Okay. So that's my loss for Monday. And let's look at Tuesday's loss. So Monday I got chopped out. Tuesday I probably okay, yeah. So this trade on Tuesday, I was looking for shorts even though I was long on my analysis. So I'm guessing I was looking for that hourly FVG to get tagged with SMTs at the highs. But you can see how once I entered at this 1 minute CISD, I got stopped out. I think I already went over this trade on my YouTube channel. But yeah, we were bullish, even though I was looking for that hourly FEG to get rebalanced. But I took that loss. So I shorted against my own analysis. Wednesday, I think this trade was due to proper or not a proper timing window. So I guess I was looking for longs. Oh man, that's not a good price action on Wednesday. Look at that. Very choppy. Yeah, very choppy. I was too hesitant in pulling the trigger. Fast due to FOMO of previous day high drawn liquidity getting taken without me. I did not want to trade before 10, but seeing price move like that without me gave me FOMO. So Wednesday I got in longs because I got FOMO. But I'm pretty sure Wednesday did deliver to my drawn liquidity. I just got in at the wrong timing. So yeah, I'm on my 3rd losing day and all trades I've been taking before 10 a.m. Okay. Let's look at okay. So after Wednesday's loss, we had Thursday loss as well. Thursday was this trade. Oh, I think I know this trade right here. Yeah, this was this trade right here. So Thursday I was looking for longs. I was looking for previous day high and 30 a.m. high drawn liquidity. I was looking for that internal external, so 4-hourly FEG, the previous day high, 15-minute SMTs with ES as confirmation, and 1-minute execution off the silver bullet zone. So here we have the 2 major liquidity levels. You can see how this daily candle opened, manipulated to discount. Now we're looking for that distribution to previous day high. Here we have previous day high, retraces down to this 4-hourly BISI. Now we're looking for that internal external context. Here we have 15-minute SMTs for as confirmation. And then here we have our 1-minute execution targeting this 830 high that we left after CPI. So I guess you can call this your data high. And here you can see the accumulation, manipulation. Now we were expecting distribution. This trade was actually taken after 10. So 10 a.m. opened, manipulated with small wick, SMT. Then this BISI, this 1-minute BISI, in line with this breaker, validated this as a unicorn. Within the -1.5 and -1 standard deviations. So this is my silver bullet zone, but when it's in line with a unicorn, that's a high probability setup. So this entry right here was the cleanest entry I've gotten. I will take this entry 1,000 times over and over. But you can see how price just delivers down. Then we start chopping here. But ultimately, we end up taking the draw on liquidity. But we just chopped prior to London close at 11. So it was not a very clean delivery, I'm not going to lie. And yeah, I even say it too. I'm not going to lie. A pretty hard week for me right now. This is where I'm just trying to survive and not lose my confidence. So I do a buy limit, then I get stopped out. And I'm down $243.70 on 3 accounts. And yeah, I was killing it last week. And now the market is killing me. So yeah, I mean, I was doing really good last week. I was executing with calm patience, executing price. I was in flow with price. But now I'm getting my ass handed to me by the market. But this execution video, or this long that I took this morning, was pretty clean. Just the first entry was just really bad timing. But the second entry was really good timing. It made up the loss and $100 more. But I'm still going to call it a break even because yes. But this is Thursday's high that got delivered after I got chopped out. But yeah, it was a very hard week for me. I'm not going to lie. A very hard week for me. And I'm not going to sit here and lie to people telling them that I'm always constantly killing the market, because I'm not. You're never going to get home runs. You're never going to get consistency. Or yes, consistency is what you should be aiming for, but you're never going to get 100% win rate. I'm an example of that. I was consistently killing it, and now I'm losing. But thing is, I'm not risking. I cut my risk in half. So I went from risking 1% to now risking 0.5%. So you can see how small this loss is, like $211 versus the winner that I get, which is 600. So that's like a 3x or a 3R. But if I take 2 trades, I'm down 417 like Monday. Then you're down 196. Then you're down 306, and so on. So let me do the math. Real quick, because I'm actually interested in knowing how much I'm down for the week. Alright, so 417 plus 196 plus 306. And today's profit was 127.60. So I'm down about $792.2. Let me see this again. So I'm down basically 0.7% for the week. No, I'm not down 0.7%. I'm down like 1.7%. So I'm almost down 2% on the week, but I'm mostly down 1.7, close to actually 1.8. So yeah, I'm down 1.8% on the week. So yeah, this week we're not down. We haven't blown any accounts. We haven't had any major loss. They've just been consistent base loss hits, I guess you can say. But we are down 1.8% on the week, which is not good, considering 2% is our limit, our maximum loss limit that we can lose in a week. But we're down about 1.7% or 1.8%. And yeah, this week hasn't been good at all. We're down we're down $5 for the week. So this week has been very rough for me in terms of reading price action, executing, and it has been very hard to get a read of it. But the draw on liquidity, the targets were very clear. It's just the delivery intraday that was really confusing for me to read. And I don't think I'm the only one who's saying this. I think there's more people out there who have taken their foot off the pedal and been managing their risk, because price has been very hard to read for people who trade like me, and it's not easy. And all I can do right now is just manage my risk and move on. So coming into next week, I have to have a fresh mindset, forget about what happened last week, and continue executing. Because this week really whooped my ass. It really did. And sometimes you just need these kinds of weeks. You need these kinds of weeks that bring you down, that makes you make that lower high, because they're always going to be there. Losing streaks are always going to be there. And you're never going to be that perfect trader that constantly executes and wins. No. Anybody that tells you that they win constantly and never lose and they have a 100% win rate, you have to stay away from those people, because those people are filling you with lies. They're filling you with false hopes and dreams that their 100% win rate is consistently profitable, because it's really not. No one has a 100% win rate. No one's constantly winning, because all you see on social media are the highlights of people winning. So what I want to do is I want to show people that even if you have a lot of experience, even if you are trying your ultimate best, even if you are doing everything you can to execute and do the right things, you're still going to lose. You can be the best trader with the best strategy, with the best risk management, with the best mindset, but you're still going to have losing trades. And it's normal. Losses are part of the game, and you have to understand that with experience and time, you'll start slowly realizing that losses are always going to be there. So how do I, as a trader, fight this stage in the journey? Like, how do you as a trader go through the losing streak, or how do you handle the losing streak? Well, first, you have to know when to step away from the gas. You have to know when to step away from like the pedal. You have to know when to slowly just relax, right? So what I did was I cut my risk in half. So last week when I was in a winning streak, I was risking around 1%. And that was when I was feeling confident. I was in a winning streak. I was executing precisely, cleanly. I was risking 1%. But now that I'm in the losing streak and I'm executing, but price doesn't want to deliver the way I anticipate it to, I cut my risk in half, and we're risking around 0.5%. So, 1, I'm lowering my size. 2, max trades I want to take a day is 1 or 2. Preferably 1. But if the draw is clear and you think you got wicked out, then I take 2 trades, like today. But all I want to do in the losing streak is survive. Because in trading, you build your capital, you generate profits, and you're building, right? But then you get hit with the week where it's not going in your favor. So now what you're trying to do is survive. Survive with the capital that you were able to build. You don't want to throw everything away in 1 week. You don't want to blow accounts. You don't want to throw everything you have worked for. So what do? You survive. You lower your risk, and you want to make everything as smoothly, as mechanical as possible. So if this week I'm down 1.8%, the maximum I'm able to be down on a week is 2%. So I'm close to my max weekly loss limit. But I want to be able to survive these kinds of weeks where price is not it for me. So once I'm trying to survive this week, next week I'm trying to build again. So next week, you want to come into the week with the fresh mindset, forgetting about the previous trades and just focusing on the now moment, focusing on the present, focusing on what you have to do as a trader, your game plan, your analysis, when, why, how you want to execute with all the rules and parameters that are backing you up. Win? Okay, journal. Lose? Okay, journal. Move on. You don't want to be stuck in the next trade thinking about the previous trade, because now it messes with you. And what I think is very hard in trading is having to take another trade the next day, but having those previous losing days in the back of your mind while executing. I think that's the hardest thing for me. Because if I come in Monday and I'm trying to execute because I see my setup appear, and in the back of my mind, I think about last week, now I'm just like, should I even execute this? Like, should I take this trade, or should I risk more, or should I risk, like, it messes with you. Which is why every day you come into the market, you need to have a fresh mindset. You need to have a fresh state of mind. You want to get into the flow state of price. Because once you feel that you're in flow with price, once you feel like you're aligned with it, like you can read it purely, that's when you start that's when I start going with size. That's when I start sizing in. Because I know I'm in flow with price. I know I'm reading the market good. So what I want to do, I want to take advantage of it. Now I'm putting the size more. I'm going back to 1%. I'm taking those base hits. I'm just trying to do what a trader does. Take a piece of the pie every single day. Slowly but surely, you'll start building that capital just by taking small base hits. Because if you try to go for home runs every single day, you're gonna get lost, and you're gonna tell yourself, why am I constantly losing? I'm trying to go for this high all the way up here or all the way down here, but I'm losing my trades, break even or losses. It's because you're trying to go for a very high win rate or a very high RR, and most of the times you're gonna get a lower win rate with the higher RR. So I like to go for 1 to 3, 1 to 2, but base hits are the most important thing. So this week, yes, I did get my ass handed to me by the market, but I'm trying to manage my risk. I'm not trying to throw everything all away in 1 week. 1 week doesn't define you as a trader. 1 week doesn't define you for your monthly performance. 1 monthly performance doesn't define your yearly performance. It all starts with base hits and knowing which weeks are not it for you or which weeks are it for you. Knowing when to step your foot off the gas, knowing when to put it on the gas, and just knowing when to size in, size out. All these things are very important to learn as a trader, and it all comes down with experience and time. So this video is mostly just for me to look back on a year from now. So I'm probably going to be like 20 a year from now, just looking at this video, because right now I'm 19, but my birthday's coming up in like a month, like 40 or 50 days. So I got 50 or 40 days left of being 19, then I'm going to be 20, but this is just a video for me to look back on a year from now. And yeah, I mean, these are the profits for today, but I'm still going to call it a break even today because this initial entry, I just didn't like it at all. It was a very disgusting entry prior to 10 open, which is why I got wicked out. So I deserve to lose money on this first entry because that was a mistake I did. I didn't look at the clock before the entry. I was only looking at the price, and you can see I got wicked out. So I re-entered, and yeah, the rest is history. But ultimately, today was very clean delivery. The accumulation, manipulation, distribution, which is what I was looking for if we did not take previous day high and closed above these civvies. But it was a very clean trade, very clean day, and honestly, this makes up for the rest of the week's PA, which has not been it for me. But this PA today, to end off the week, was very clean. So I actually like this PA. These are my kinds of days where I already know is going to be a very clean delivery. But yeah, that's probably going to be it for this video. So, Carlos, a year from now, you are going to be in a better state of mind because all these things that you go through is what builds character. It's what makes you who the trader are today. So, I am in your memory right now. As you're looking through your head right now, as you're thinking, I'm in your memory right now, and I'm just letting you know things happen for a reason. Be grateful you take losses because without them, you're not going to be where you are now. You're going to be. So, yeah, this is pretty much it.